Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's top stories with you. We're coming off a strong third quarter in the U.S. stock market, with the S&P 500 logging its best September since 2010. The Dow Jones Industrial Average even closed at a record high. But what's driving this growth, and can it be sustained? According to recent reports, investor confidence in the economy's resilience is a major factor. Despite shutdown concerns, Wall Street isn't overly concerned that a potential government shutdown will derail the market's recent string of record highs. In fact, Omar Aguilar, CEO and Chief Investment Officer at Schwab Asset Management, notes that any market volatility would hinge on the length of the shutdown and its subsequent impact on data visibility for the Fed. One sector that's been leading the way is technology, with the top 10 tech and tech-adjacent companies now making up nearly 39% of the S&P 500. Names like Nvidia, Intel, and Oracle have seen significant gains over the past quarter, with some even surpassing 30% growth. But this leadership comes at a premium, with these companies trading at 36.5x forward earnings, compared to 24x for the broader index. Now, some might argue that this is a sign of a bubble forming in the tech sector. Others might say that the AI revolution is just getting started, and we're seeing the beginning of a new era of growth and innovation. As Kevin Mon, Chief Investment Officer at Hennion & Walsh, puts it, we're in batting practice of a doubleheader as it relates to the AI revolution. The question is, will this trend continue, or will we see a correction in the market? As always, we'll be keeping a close eye on these developments and bringing you expert analysis and insights to help you navigate the world of stocks and finance. We'll also be exploring other key stories, including the impact of the Fed's rate-cutting cycle and the potential effects of a government shutdown on your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of cannabis stocks, where recent developments have sparked significant interest among investors. A video shared by President Trump caught the attention of Wall Street, leading to a surge in investments in top-rated cannabis stocks. Now, we're not here to speculate on the president's intentions or the potential for federal-level legalization, but rather to provide you with an overview of the current landscape. We've got three stocks that are worth looking into: WM Technology, Green Thumb Industries, and Corbus Pharmaceuticals Holdings. WM Technology, which owns Weedmaps, a consumer-facing platform, and Weedmaps for Business, a B2B software solution, saw its stock jump by around 7% after the video was shared. However, it's essential to note that the company's revenue has declined since its peak in 2022, and profits are lower than they were in 2020. Green Thumb Industries, on the other hand, is a cannabis and consumer packaged goods company with a comprehensive range of products. Its stock rose almost 19% from its Friday close to its peak this Monday, but like most other cannabis stocks, traders are awaiting more clarity. Corbus Pharmaceuticals Holdings, a biotech company with a history in endocannabinoid system research, saw a small uptick due to its indirect connection to cannabis. It's crucial to remember that investing in the cannabis industry comes with inherent risks and uncertainties. While some analysts have given these stocks a strong buy rating, it's essential to do your own research and consider multiple perspectives before making any investment decisions. We'll continue to monitor the developments in this space and provide you with updates as more information becomes available. In the meantime, we encourage you to stay informed and cautious when navigating the complex world of cannabis stocks. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's take a look at some of the top dividend-paying stocks that are making headlines. We've got a diverse range of companies across different sectors, each with its own unique strengths and characteristics. First off, we have Philip Morris International, with a dividend yield of 5.42%. The company has a strong track record of paying dividends and has increased its payout for 14 consecutive years. However, it's worth noting that the tobacco industry is highly regulated, and the company faces significant challenges in terms of declining smoking rates and increasing competition from e-cigarettes. Next up, we have AT&T, with a dividend yield of 4.13%. The company has a long history of paying dividends and has increased its payout for 38 consecutive years. However, the telecommunications industry is highly competitive, and the company faces significant challenges in terms of maintaining its market share and adapting to changing consumer preferences. We also have Mid-America Apartment Communities, with a dividend yield of 4.34%. The company has a strong track record of paying dividends and has increased its payout for 15 consecutive years. However, the real estate investment trust REIT sector is highly sensitive to interest rates, and the company faces significant challenges in terms of maintaining its occupancy rates and rental income. Other notable mentions include Armor Residential REIT, with a dividend yield of 19.77%, and AT&T, with a dividend yield of 3.92%. While these companies offer attractive dividend yields, it's essential to remember that high-yielding stocks often come with higher risks, such as interest rate sensitivity or industry disruption. As we conclude today's episode, it's crucial to remember that investing in the stock market always involves risk. It's essential to do your own research, set clear goals, and develop a well-diversified investment strategy that aligns with your risk tolerance and financial objectives. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.